the Vancouver market price is starting to chill? Well, if you want to ask my opinion, it is. So let's go through the most reliable sources, the news, and let's read through the headlines, and I'll interpret the data for you. Don't panic. Vancouver housing market correction is underway. So interest rates have been increasing. It's 5-year mortgage rates are at about 4.92%, and variable rates are about 3.72%. But the interest rates are actually anticipated to rise again 0.5% in July. And this is a forecast from Desjardins that interest rates are actually going to go up to about 5%, which is actually it is right now. And there's less people purchasing, going to purchase soon, my feeling. And right now, people are at pre-approved rates right now, and they are rushing to purchase right now because their rate expiries are going to end soon. And most likely they have to reapply sometime in August at higher rates. And I think some buyers might actually be priced out of the market. And right here, a lot of the experts are forecasting that BC real estate might actually be down by 2023 by 15%. I think that's kind of welcome news actually, with prices coming down a little bit. But they also said that Vancouver has a lot of immigration, which is actually true. Vancouver has a lot of immigration. A lot of people immigrate to Canada every single year. And actually a lot of people are immigrating back into Canada that actually have citizenship. Like they're living in Hong Kong, and there's civil unrest there. And lots of people are transferring their money, and actually money has already been transferred into Vancouver. And some realtor colleagues have informed me that they have a lot of Hong Kong buyers looking to purchase, and they're savvy buyers, just like everybody else. They're waiting for the right timing and for a good price correction. Like did a study too, and they're saying that one in four home owners will probably sell their home if they can't afford their payments, right? If interest rates continue to rise. So over the last 2 years, interest rates were really, really low. At one point, interest rates were at 1.39% at the end of 2020. And, as I mentioned before, interest rates are close to 5% now. And that's an incredible jump. And with interest rates might go up another half a point or even an extra point by the end of the year. This is not going to affect the market right away. In terms of these people defaulting, the people that went all in the last few years, we're not going to see these people default unless 5 years down the road, when their rates have they have to renew their mortgages. But you know what? If they stay with the same lender and that means they don't have to requalify. That means they're not going to be in trouble. They just have to make sure that they could afford the payments. If they can't afford the payments, hey, they're selling. And that goes the same with a lot of the investors that double dipped when their interest rates were really low at 1.39%. They took money out of their equity line of credit and just went on a shopping spree. I bet you that it was most of the buyers, 33% of the buyers out there during the pandemic were investors looking to double down. And that strategy did work. From the beginning of the pandemic to now, people were making good amount of money just flipping properties. They were buy it at the beginning of the pandemic, and they would sell it just recently in the last few months. So they're making like 100,000 over the previous year to 150,000, sometimes even 200,000 in that short period of time. But CRA will come after you. You have to declare your income, right? So let's look at the chart of the interest rates over the last few years. As I mentioned before, the historical discounted rates. You see at the end of 2020 as a 1.39%. Right now it's getting up to the 3.69%, but actually the more accurate number is actually the 5-year discounted rate is getting closer to 5%. And then your qualifying rate, which is your lowest discounted rate plus 2%. So you're actually qualifying at about 7%. And I don't know about you. I don't think a lot of people got a lot of raises recently. So there are going to be a lot more people on the sidelines coming up pretty soon, I guess, in the next 3 to 6 months. But let's look at what's happening with real estate prices. Here on the single detached homes in Greater Vancouver, we see a 1-month price decrease of about almost 0.7% in Burnaby East, 0.4% in Burnaby North, and almost a 1% decrease in Burnaby South. That's a 1-month decrease. And the decreases are just starting right now. In Maple Ridge, we see a decrease of 2% for detached homes. And then Vancouver East, there's actually no decrease as of yet, but it's a 0.03 increase. Actually, in Vancouver East. Vancouver West side is a decrease of 1.2%. So you can start to see that the trend is developing, that we're seeing about a 1% decrease every single month, continuing on from June onwards to the end of the year. So we could probably see by the end of the year maybe an 8% decrease. In terms of townhomes we see not a decrease. In Burnaby East, we see a 1.2% increase. Burnaby North, we see a 3.1% increase. Burnaby South, we see 1.3% increase in townhome prices. For Coquitlam, we see a 2.4% decrease. And Maple Ridge, we see a 2.7% decrease in the townhomes. Vancouver East, we see a 0.7% decrease. And in Vancouver West, we see a 1.2% decrease. So, and if we look into the apartments in Burnaby East, we see only a 0.5% decrease. Burnaby North, we actually see an increase of 0.8%. And Burnaby South, we see a 0.1% increase. So not much decreasing in the Burnaby area. Coquitlam, we see only almost a 1% decrease in Coquitlam. New Westminster, only a 0.3% decrease. So in the apartment market is still quite strong. The decreases are starting to be, but it's very gradual. At certain price points, we're still seeing a lot of multiple offers. In this market, I'm forecasting it's going to be a more balanced market. The easiest way to predict what's going to happen to our market is actually to look at our active to sales ratio. We're looking at the active to sales ratio. This is across Greater Vancouver. And you can see at the high point of, say, May 2021, our active to sales ratio was at 0.58%, which means that 58% of all homes listed were selling, which is actually a very high number. Basically how that stat works is if homes consistently sell at 20%, 0.2% over the next 3 months, is usually a good indication that prices are increasing if it's over 0.2. But then if the active to sales ratio is below 0.12 for a sustained amount of time, you're going to see price decreases, and we're going to enter buyer's market territory. But right now, we're still in a seller's market territory, but it is coming down. You see 0.54 in March, and it's coming down. Right now, it's going to 0.29. So we're still in the seller's territory. It looks like if you were to wait maybe till December, you'd be in a good buyer's territory, I would suggest, because the decreases are about 5% every single month here going on forward. I'm predicting that prices are coming down very slowly though, because real estate is tentatively really slow. And if you need any help, feel free to reach out to me. I still help buyers every day and still help sellers every day. If you're a seller, I probably consider selling if you have an investment property. But just let you know that it's going to be a balanced market. And for buyers, most likely you're probably rushing to get in. Otherwise, I would maybe wait on the sidelines for a little bit longer, but it all really depends on interest rates. If interest rates are not dropping, it seems like interest rates and prices don't really correspond really well. So if the price is right, just get in there. So if you like this video, like and subscribe. I'll talk to you later. See you later. Bye.